and welcome to this week's What's Hot. And what is certainly hot is the invoice that Just Eat will be getting for its multiple RNS statements that have been released over Monday and Tuesday of the past week. By my reckoning and counting, 31 RNS statements, all to do with the takeovers of the takeaways. Now, this is what you need to know. Prosus, it's the Amsterdam listed company that owns the online assets of Naspers. Well, Prosus has thrown a spanner in the works of Takeaway.com's bid for Just Eat. Prosus has offered 710 pence a share, which is a 20% premium to the Takeaway.com offer. So who are Naspers? Well, Naspers is 104 years old and it is Africa's largest company by market value. It controls Latin America's biggest food delivery app, iFood. iFood is partnered with Just Eat as an investor. Well, Naspers has invested hundreds of millions of dollars in India's Swiggy, and it acquired a $10 billion war chest for deals when it sold a slice of its stake in Tencent last year. Naspers still owns 31% of the Chinese internet group, and that is worth a cool $125 billion. Well, on Wednesday, no doubt, the corporate headlines will be coming from the US when we get Q1 results from Microsoft with its cool $1 trillion market cap. And we'll also be hearing from Tesla, Q1 results from Tesla, and it has a market capitalization of $43 billion. Well, here in the UK on Wednesday, we get the Q3 production report from Antofagasta. Its market cap, £8.5 billion. And here is the share price from the last 3 months. We also get third quarter results from Centamin, and if you don't know who Centamin is, let me tell you, it is the gold mining company focused on the Arabian-Nubian Shield. Last week the stock dropped after analysts at Berenberg cut the stock's price target. It followed the news that Chief Executive Andrew Pardey will be stepping down in the not too distant future. However, investors, including DLTS or DELT, are optimistic. Thursday, a busy day. We hear updates from many of the bellwether stocks, including Royal Bank of Scotland, and from the States, Amazon and Visa, two very complimentary bedfellows. And also not forgetting, here in the UK, we will be hearing from AstraZeneca. So let's stick with Royal Bank of Scotland. The analysts at Hargreaves Lansdown have been putting a lot of thought time into this stock. They say that shares have been driven higher this past month due to more positive news about a potential Brexit deal having finally cleared the decks after the financial crisis. A good deal would make life significantly easier for RBS. Analysts paying particular attention to how the group's weathering the current political turmoil. Metrics such as loan growth take centre stage since borrowing has tended to fall when companies and individuals are less confident. Bad loans will also be in the spotlight, as will the cost base. But will it be too early for recently appointed Chief Executive Alison Rose to reveal her hand in terms of what she would like in terms of long-term plans for the bank? Well, Jim Jam is waiting for the stock to re-rate. Friday, it is a feast in terms of the bigger companies reporting. We hear from WPP, Glencore, AB Inbev and Barclays, just to name a few. Well, WPP in July said while about $1.2 billion, that's £1 billion, will be returned to shareholders, the form of this return will be communicated to shareholders in due course. Maybe it will be this week. Well, a lot of press this week being devoted to the world's largest ad agency losing a huge chunk of one of its oldest, most valuable accounts, Johnson & Johnson. Insiders saying Johnson & Johnson are unhappy with recent boardroom reshuffles, though can we be sure that it's anything to do with Sir Martin Sorrell's departure? Because he did so April 2018 as CEO. Now, he had, up until that time, been the longest serving boss of a FTSE 100 company. And then, like a phoenix, he returned as chairman of S4 Capital. Well, finally, on Friday, it's third quarter results from AB Inbev. We all know its brands, even if we're not sure who is behind them. Well, the brewing giant saw its fastest volume growth in more than 5 years in the second quarter, the preceding quarter. Management expects the third quarter comparison to be particularly tough. Now, premiumisation is going to be mentioned. That's the trend among drinkers to buy quality over quantity. It's a key part of management's plans to continue growing both sales and profits. Think Budweiser, Stella and Corona. But debt still remains an issue after the company's 2016 acquisition of SAB Miller. Net debt stood at $104 billion at the end of June. That is a big round of beer. I was going to say mine's a pint, but mine could be several pints. Any case, it's all about takeovers this week. Plenty more headlines to come next week when I'll be rejoining you. Thanks for watching.